What's up, everybody? It's Meet Kevin, and today we're going to get naked. That is financially naked. Now, I think it goes without saying, but most of you know that I'm a big fan of investing in real estate, so why the heck would I also invest in stocks? If I can make so much money in real estate, why bother having any money in stocks? Well, let me get the two reasons out of the way. Number one, reserves, which basically means when I go apply for a loan, the lenders say, all right, Kevin, you have X many properties, you need to show a certain amount of money in reserves. And for some stupid reason, they count stocks at 90 to 100% face value, even if it's in a retirement account. Whatever. So in other words, by having money in stocks, I can qualify for more real estate. And number two, while I'm waiting to buy a deal, I usually park my money in an index fund because I really don't expect it to tank a lot while I'm hunting for a deal. And if it does, maybe I don't want to buy a real estate deal until the tanking is done anyway. And I don't mean like World of Warcraft tanking, I mean like market plummeting. Without further ado, let's log into my old Scottrade account, which is now a TD Ameritrade account. This is my primary personal stock trading account. And when I say stock trading, know that I don't really trade stocks. I'm too lazy to sell anything, so I just buy. Usually I buy on red days, but I have to say, like the last 60 days, there haven't been any red days, so it's been a little bit frustrating. All right, first position is in my personal stock trading account, Apple. I have 178 shares of Apple at, I believe, what is this? That's what the current price is $280. I have a cost basis of $21,547. And this has a market value of just shy of $50,000, which is about a $28,000 gain, about 131%. Obviously, I don't think anybody could have gone wrong buying Apple over the last 10 years, so I don't really feel special, but Apple is the first stock that I've ever bought in my life, and I have to say it has jaded me towards stock picking. So that's now going to lead to stock position number 2, which is Amazon. I actually only recently bought Amazon. I think this is alphabetized. I bought this maybe a week or two ago. I bought it at a price of $17.92. And while I'm not gonna go into a deep technical analysis on these, which I do before I buy any stock, I'm just gonna be upfront here and say I'm a massive user of both Apple and Amazon products. You'll also see some of the other stocks and you'll see, oh yeah, these are all things Kevin uses. So yes, I may be jaded towards the companies I frequent, but know that for every stock I buy, I read the financial reports. I try to understand everything about the company's positioning and growth strategies. One of my favorite things for Amazon right now is Amazon's push into one-day free shipping, which is a big cost for the company, but it's going to be a game changer for retail and also food delivery. I know it sounds crazy, but when you've got 2 kids and you run out of milk, there's something about 2-hour Whole Foods delivery, even though it's a little pricey. Now, while I did just buy this stock, it looks like I've made $1,000 on that bet, or $950. So I'll take it. Cool. I've only had it for like a week. All right, next stock we've got is, ooh, I probably shouldn't have shown that one, but yeah, so I did actually buy a little bit of Redfin stock. It's a little bit embarrassing. It's $14,600 that I've got in Redfin, market value of $17,000 now. I have to say, I honestly bought this with a 17% gain here. I honestly bought Redfin as a little bit of a hedge because I thought if Redfin was gonna put me out of business as a real estate agent, then Redfin's probably gone up 1,000%. And it'd be worth having a little bit of exposure to Redfin as a hedge. Yeah, I hope I don't come across as like a traitor for owning a little bit of Redfin stock. By the way, quick shout out to Alex Chen, who says, normally I don't write a review for anything I purchase, but the real estate investing course that I bought from Meet Kevin was so worthwhile. I found the most valuable aspect learned from the course is the way to interact with another person, the psychology behind people's motivation, and to shape myself with the correct mindset in dealing with situations. Real estate knowledge is the second best thing in the course, but the art of interacting with another human being the most valuable lesson one can benefit from so much in life. That was actually a really cool testimonial because, yeah, it's true. The art of investing in real estate isn't just about throwing in a cap rate into some stupid app. It's psychology. Dealing with people, dealing with tenants is the way to make money in real estate. Pretty different from stocks, but hey, we'll see you in there. Take advantage of that coupon code. It does expire on 12/20/2019, so I hope to see you there. All right, next one I've got Starbucks, because I actually drink Starbucks and I'm not ashamed to say I am willing to spend money on lattes and coffee at Starbucks, and I buy my friends Starbucks too. Okay, so I've got 220 shares of Starbucks, cost of $15K, value of about $19.5K. I actually thought I had more Starbucks. Oh well. Next favorite stock is Target. Target's actually my favorite dividend stock right now. The dividend is just over 2%. My cost is about $15,000 at Target, and I'm at about $25,000 market value for Target. Next, we've got, of course, a Tesla. I've pretty regularly been buying a Tesla. The lowest I ever got into Tesla was like 185 this summer. I wish I could say I bought all my stock then, but I didn't. I've got a basis in at Tesla of $86,000 with a current market value of $130,000. So obviously Tesla's done pretty well next to Apple. One of the top results here. So for my personal stock trading account, I've got $283,000 in this portfolio, and that's it in terms of individual stocks that I pick. I'll show you some retirement accounts in just a moment, but I want to get to my index fund next. So this is probably not the smartest thing to do, but I recently moved a bunch of money over to the Wealthfront Index Fund, and I'm getting ready to use that money to buy real estate, but I'm too, maybe I guess you could call it FOMO-y. I can't stand having my money sit in even a high yield savings account. So rather than have my money sit in the Wealthfront high yield savings account, I move it over to Wealthfront's index fund. Quick heads up, I just have to clarify. When I say Wealthfront index fund, I actually mean Wealthfront's investment account. I just say it because when you put money into Wealthfront's investment account, it automatically gets allocated by their robo-advisor software into multiple different index funds. So I just call it Wealthfront's index fund, even though that's technically incorrect. It's just the most logical name that I give it, so sorry. So here it is. You can see I recently dumped a pretty large sum into the Wealthfront index fund. I put about $300,000 in recently. And what's neat about it is you can see that I've contributed a total of $298,000, but I actually have an account value of $305,000. This kind of shows you, well, actually $306,000. This shows you that recently the index fund has gone up enough to give me an about $6,000 or actually more return on the money that I've been keeping in this index fund, which is obviously a lot better than I would have gotten in the savings account. Now, obviously the market could fall tomorrow and then I'd be crying because those short-term gains that I got would be short-term losses pretty fast. There are two things that are actually really cool to see here though. Number one is how they distribute your money automatically for you. See, Wealthfront is like a robo-advisor, so they automatically kind of do all this junk for you. You can see they put $106,000 into US stocks. That's where the majority of the gains have been. And if I click on that, you can actually see that they're using, holy schmoly, they're using a ton of different things. So honestly, I don't know what all of these different things are here. I know most of these that we see with the V are Vanguard funds, but there's also this WF100, and I believe that's something that's supposed to emulate or look similar to the Vanguard index funds. And the reason they do that is for this thing called tax loss harvesting. And basically they're trying to save me money on my taxes. They even have this little digest page which says over all time they've harvested $576 worth of losses, so that would be a taxable benefit to me. That sounds pretty cool. I didn't even know they did all this stuff. And they automatically reinvested almost $400 in dividends. Like, I keep my money here so short term, I don't even really care what they do. It's just cool that it's automated. And I know I feel like I sound like a Wealthfront shill, but I'm not. I promise you, I'm just lazy and I don't want to have it sitting in a savings account, and it's been good so far. Then it looks like they put 9.3% in foreign stocks, which is mostly VEA. That's one of Vanguard's foreign developed markets ETFs. Now keep in mind, even if you get Wealthfront's 0.25% fee waived with referrals, you still have to pay the underlying fees. So for VEA, I still have to pay that 0.05% as a fee to Vanguard, but I pay Wealthfront nothing. Then we've got emerging markets. That looks like it's put into IEMG and VWO. That's iShare and Vanguard's. Then they put some money into dividend growth funds. They've got some Vanguard there as well. Bonds, a little bit of cash, risk parity. Okay, whatever. You can look at this little picture yourself and pause it if you want. Now, one thing that I will say is really cool about this Wealthfront app as well is I love the portfolio line of credit. If I want to borrow up to $79,200, all I have to do here is click on borrow cash, and you flip through some of the screens here, no application, whatever. How much do I want to borrow? Well, let's just borrow, I don't know, there we go, $25,079. Continue. We'll go ahead and drop that into my personal checking account, and I could click yes, send my cash, and it would show up right away. Now let's jump on over to my first retirement account. The first retirement account that I've ever set up was a self-employed person's IRA, basically a SEP IRA. I know it's not really IRA, but that's how people pronounce it sometimes. Anyway, the SEP is really cool because let's say you're self-employed and you have an S corporation, you pay yourself a little bit of a salary, you can put 25% of your pay, and obviously check with your CPA, this gets really complicated. But anyway, there's a certain amount of your pay that you can contribute to the SEP, up to I think somewhere around $56,000, which is awesome. And you get a tax deduction for making that contribution. Now, I know a lot of people might be thinking, oh, but Kevin, you should be using the Roth. Forget the tax deduction. The reason I prefer retirement accounts where I get the tax deduction, even though that means I'm going to have to pay taxes later in life, not so worried about it, is because I want to buy more real estate now. By having more money in my tax retirement accounts, I get to use more money as reserves, show more money to buy real estate, which means I can qualify for more real estate. So I don't really care about saving taxes later. An uncertain future isn't interesting to me. I'd rather save taxes today. This is why you'll see I'm only going to show retirement accounts where when I put money in, I get a tax deduction. That's because I don't use the Roth. Now, I don't want you to think that I'm bagging on the Roth. I think the Roth is great, especially when you're in a super low tax bracket where the tax savings aren't really going to help you out anyway. But for my purposes, since my primary vehicle for investing is real estate, and even though these stock returns have been pretty dang awesome so far, I'd rather have more money going into a place I know I could get certain and excellent returns consistently. And that's buying wedge deals, which is what I teach you how to do in the real estate investing course, obviously linked below. Oh, and keep in mind that coupon code does expire today. That's 12.20. Make sure to use that before the expiration because the price is gonna go up a little bit. All right, here we have my SEP IRA. You can see that this account has a total value of $46,500. And check out the gains on this one. First of all, Yelp has been a total loser. I don't have much money in Yelp. It looks like I have about $10,600 at Yelp, but my Apple stock over here has grown to a value of $34,000, in which I only invested about $10,000. I have, what is that, two Tesla shares, and those have obviously done well as well, but most of the money in this account has grown thanks to Apple, so thank you, Apple. Maybe I should go buy the Mac Pro now. Nah. Now in 2018, I was not able to use the SEP IRA because I had a bunch of employees in 2017, 18, and a lot of 19. So I had to use something called a simple IRA. And I did this for both Lauren and myself. We funded this, and Lauren, well, I basically did it for her. She spent all of her money on Tesla stock, and I spent all of my money on Apple stock. So here we go. Here is the simple IRA, what it looked like for the 1 year that I've used the simple IRA. Plan to use it again this year, although I might use a different strategy. We'll see. I'm talking to my CPA right now. It's the end of the year, so it's the best time to figure it out, like right now. But anyway, here it is. I honestly kind of feel like an Apple shill right now because there's so much Apple going on here. But anyway, you can see I spent $12,865 buying Apple stock, which is basically the maximum contribution I was able to put in for 2018. I think it was $12,500 plus the employer got to match like $300 or $400, something like that. I don't really remember exactly. But anyway, that's gone up in value by over $10,000. Honestly, I think that's just fluke, like whatever. You know, I can't say that like I'm some superior investor because of this. It was literally like throwing a dart and I hit Apple. Just for giggles, I decided to put Lauren's simple IRA up, which Lauren made her purchases with the same exact amount of money on the same exact day I did, except Lauren picked, well, I picked for her, but one Apple stock and the rest Tesla shares, and she's at $17,679 compared to mine, which was all Apple, at $22,976. Yes, beater, yes, winner, winner, yes. Those are the competitions we have. Now, I did also open a Lively HSA account. I honestly don't know so much about HSAs. You can see here that the Paffrath family HSA has contributed $6,900. That was, I believe, for the 2018 tax year, $6,900. That was the max contribution we could do for that. It was another tax deduction, which is why I did it. But the other cool thing is you can now spend this on medical expenses, which, think about it this way. For our second baby, we had to get some fertility help with Lauren. And when we went to a fertility doctor, we had to pay them, and the money we paid them was not tax deductible. However, now because we have money in an HSA, we can actually take fertility treatment bills, have them paid from this HSA account, and it's as if we are spending money on medical expenses and getting a tax deduction to do that. So anyway, you can see we've contributed $6,900 to our Paffrath family HSA. And if you go over here, you'll see the investment value is $9,200. I probably put it all under just one stock because that's kind of what I do. And it looks like I literally put it all in Tesla. Yeah, well, that'll do it. So, okay, cool. Now, there's only one last remaining holdout that I have for where I keep my stocks, and that is Robinhood. I barely keep money here. I'm really just signed up for this to be part of the hype. And I'm tired, forgot to film an outro, so this is what you're gonna get. Follow me on Instagram. Until next time.